Plan to get started and call to order the Police and Fire Retirement Board meeting for September 5th, 2019. Here today present, our Chair, Vincent Seri, is not going to be here today. He's going to be absent. Myself, Andrew Gardner, is present. Trustee Gia Girardi is present. Trustee Drew Lanza is present. Trustee Eswar Menon is present. Nick Mio is present. Vicus Oswald is present. Richard Santos is also present. Franco Vado is going to be here. He's just running 5-10 minutes late. Orders of the day. We are going to defer item 2E, presentation of calendar first quarter 2019 private markets report by Makita Investment Group. We also, items 3A and 4C, we're just going to make sure it's heard before 10:30 a.m., and I don't think that will be an issue. We are going to have to waive sunshine on 4C, discussion and action on the city plans to release an additional disability medical panel request for proposal, and also waive sunshine on 3A, attachment 4, discussion and action on a request from POA regarding conducting an actuarial study to determine the impacts of eliminating the remarriage provision under San Jose Municipal Code, Section 3.361200F.
Motion to approve.
Motion approved by Santos. Second by Nick. All in favor?
Aye.
Aye. And just a reminder to speak into the microphone, and for motions, I'll repeat whoever's making the motions, and for any guests that are speaking, to please state who you are. From there, let's go and to the consent calendar. Is there anything on the consent calendar that needs to be pulled and wants to be discussed? If not, we have a motion.
Motion approved.
Motion by Santos. Second by Nick. All in favor?
Aye.
All right, carry, that passes. Let's go to section 2, investments. And before we go to investments, I also want to acknowledge we got Barbara, director here, and then also our CIO, Prabhu. All right.
Thank you, Mr. Chairman. I'd like to, before I start, I'd like to welcome Eileen Neal from Veris. Eileen actually succeeds Ed Hoffman as our primary point of contact at Veris, and has over 30 years of industry experience. And prior to Veris, has been at Veris for 2 years, and 29 years prior to that at Wilshire. So welcome, Eileen. Last month, the board had actually approved the revised strategic asset allocation, and I just wanted to give a quick update on that. We had decided to implement it in 2 phases. If you recall, we were going to get to our risk target with the first allocation, and then we were going to add a little bit more risk in a second phase. So the first phase was transferring 5% of our assets from treasury bills to growth assets to actually equity, which we did implement this past month end. 3% went to emerging markets, 2% went to developed market equities, and we actually have passive exposure to both asset classes. We've also started reducing our absolute return allocation from 7% to 5%, but because there are some redemption rules around those funds, we're now at 6.3%, and throughout the remainder of the calendar year, we will be redeeming those funds. The second phase, at the last board meeting, we decided that we will check with the IC and seek the IC's input on how to implement phase 2 of our strategic asset allocation change. And the IC recommended that it be done at the discretion of the investment team, but no later than December 31st. And just to remind everyone, that was a further 3% into growth assets. So that's the update on implementing the strategic asset allocation. With that, I'm happy to take questions, if any.
All right, if there's no questions, we'll just go to 2B.
Thank you, Mr. Chairman. I'm going to invite Jay Kwan to talk about renewing Alborn's contract.
Good morning. Thank you for hearing this item ahead of the fee report. I hate asking for money after talking about how much money we just spent. This item would normally be short, but I just wanted to clear up some of the discussion we had at the IC. So this approval was heard at the IC, but we need the approval of the full board. So you might remember that Alborn is a specialty consultant for the plan's hedge funds. They were hired in 2012. Their contract expired a couple months ago in June. We're currently operating on a month-to-month extension with Alborn, and they're willing to continue working on a month-to-month basis. But we do need the board's approval, so because the original contract and the original term of the board's approval at that time has expired. So that's what we're asking for here. The larger context is that, as probably noted, the absolute return program is undergoing some changes, all right? A few years ago, the plan had over 16% of assets in more than a dozen different hedge funds. But both the size and number of hedge fund exposure has decreased year by year, and by the end of this year, we could be down to 7-ish%. So we're also looking at the same time at reshaping the philosophy and purpose of the absolute return allocation to a model that might require a substantially different level and different type of support from a consultant. So we're working on that re-underwriting of the philosophy and objectives. Hope to have that completed by the end of the calendar year. And once we know what that new program will look like, or what we want it to look like, then we'll know what the appropriate level of support would be from a consultant. And at that point, we'd like to have some kind of either renegotiation with Alborn or search for the appropriate service provider. So what we're seeking here is authority to continue operating on a month-to-month basis for up to a year at the current cost, and the cost is laid out in the middle of the memo. At the IC, I think there was a little bit of a misstatement on our part in framing this as a one-year contract renewal. So we're not intending to renew with Alborn and sign a new contract for a full one-year term. Instead, we're asking for approval again to continue using Alborn on a month-to-month basis for up to a year at the current cost level. And remember, it's a year because we're looking to complete this re-underwriting process by the end of, within the next couple of months. At that point, we should have some picture of the kind of program we want, and we'll know the type and level of resources we want from a consultant. Also, we're looking for a one-year renewal because even if today we put in redemption notices across the board for all of the hedge funds, there would be, as Propo noted earlier, the redemption terms of the funds are staggered, so that it could take a full year to be completely out of that program. So long story short, staff recommendation is to continue using Alborn on a month-to-month basis for up to a year at the current cost noted in the memo.
Thank you, Jay. Any questions?
Can I ask, on a day-to-day basis or on a month-to-month, how do you use Alborn and how do you expect that to change?
Sure, and I can tell you how we use them now. They provide comprehensive investment due diligence and operational due diligence over the entirety of the hedge funds we have across the plan. And so, again, a few years back, that was a much more complicated project than it is today. But they produce a set of monthly reports that include updates around firm structure, portfolio management staff, processes at each of the individual funds and strategies we hold, as well as a little bit of a summary around performance and attribution. And so they do a lot of, I would just call it the groundwork involved with the regular due diligence process. So I think if you ask them, they have that kind of classic line, they're an extension of staff. In this case, if you think about the diversity of strategies we have across hedge funds, It really helps to have someone with kind of specialists across each of these sleeves cover that particular strategy. And so when I'm doing my either monthly or ongoing process, then I can pull those reports, get up to date quickly with what's going on, compare that to my notes, and see if there's any gaps.
Okay, and, I mean, I guess the city pays like more than $500,000, right? Is that?
Yes,
between the
so
two plans, I
collectively,
mean,
between the two plans,
Between
it's
two
it's
plans,
close.
I mean,
It's very
and is
close.
that price kind of typical of the services they provide? To me, I guess it seems kind of high, but,
Right, and I don't have a lot of clarity now. We haven't rebid out the contract, right? That's not what we're asking for. So certainly, when the contract was awarded, and again, we had a larger portion of our plan in hedge funds and a larger number in diversity, I think that was very appropriate at the time. We did a thorough RFP at the time. We had multiple shortlisted candidates, and it was, if I recall, the pricing was kind of in line with the other participants. If we were to rebid it today, and this goes back to your earlier question, we'd have to take into account what we want the new program structure to be. And there's a wide range of outcomes for that. So, like I said, in a couple of months, we'll have that project completed, hopefully, and then have kind of the requirements for a new consultant laid out. And then we'll check, obviously, what the pricing for those requirements would be.
thank you.
And just to clarify, the city does not pay for it, the plans
The
do.
plan.
Yeah.
Gia?
I just wanted to say, in investment committee, we had a pretty long discussion around the cost of this, right, which looks on paper, quite substantial. I think what we determined was that, with the program kind of undergoing changes with, perhaps not as much activity as there was before, people had concern paying that amount. But I think the long and short of it is, Jay and the team are going to revisit this in a few months. So the approval here today is to go month to month until they can pull together a plan for a full RFP, at which time we can probably have a lot more substantive discussions.
That's exactly the gist of the conversation we had at the IC. And I'm not sure if it'll be an RFP at the time when it comes out to bid for new services. It really depends on what we decide the new structure should be. But there will be some kind of reevaluation.
All right, so there's no other discussion. This is an item that needs to be approved by the full board. So I could entertain a motion.
Yeah, motion to approve.
Motion to approve.
I'll second.
Motion by Santos, second by Gia. Any more discussion? All in favor?
Aye.
Aye.
Great, thanks.
Thanks, Jay. All right, 2C, discussion on the calendar year 2018 investment fee report to be presented by investment staff. Good morning, gentlemen.
Good morning. So we're here to present the fourth annual fee report for the calendar year 2018. This is a pretty unique report for pension plans in general because it really provides transparent views of all the fees and expenses that we paid to investment managers, as well as the cost to run our investment program. And we can probably count on a single hand how many pension plans within California, for example, actually produce such a report. Now that we've had 4 years of data, we've been able to put together a time series to show how fees have changed over time. And I want to acknowledge David, who put together the report this year, as well as the accompanying presentation, which has a graphical view of why fees have changed over time and how they have changed. So if we can turn to the second attachment, we can get started.
Thanks, Dinesh. Good morning. So as Dinesh mentioned, there are two documents, the longer, more detailed fee report, and then the shorter presentation hitting on hopefully some of the highlights and takeaways that we thought that we wanted to highlight from the fee report. So if we, if everyone turn to the presentation, and we can start there. So on page 2, this is essentially the headline number. So fees, total fees from last year declined about 18 basis points from 1.4% to 1.22%, driven mainly by a decline in management fees and helped by a decline in incentive fees. We'll dig into a little bit more about management fees later in the presentation. On the right, we try to kind of, take a look at the universe in terms of peer comparisons, and like Dinesh mentioned, this data is very difficult to come by. The one source that we look at here is, reported fees from the CAFRs. And just a caveat here, CAFR fees are primarily just invoice management fees. So there's a lot of things not captured, such as management fees that are charged directly to the fund, as is common in a lot of private strategies. So the main takeaway here is that you can see, I think, ORS in the red bubble is kind of, middle of the road. And, that's kind of, what we expect. So flipping over to the next page. Just taking that 2017, 2018 delta and putting a dollar number on it. The 18 basis points, it represents a $3.4 million saving in fees paid to the plan, from the plan. Flipping over the next page, just wanted to kind of highlight this point a little bit, how kind of fees are a function of asset allocation mainly. And, asset allocation is primarily determined by, you fine folks over here. But, that being said, the investment staff definitely has levers to pull for a given asset allocation, and try to highlight a couple of things that, we can, increase fee efficiency, such as within a given asset class, what strategy to pursue, whether you go active, passive, or, go into private funds. In certain asset classes, you don't really have a choice, like private equity, but global equity, you can choose to go look for the active managers, or you can go passive. Similarly, fund type, ideally, I think you'd like to be in a separate account, lower fees, highest control, but in some cases, it's just not possible. Fee structure, you can try and maximize fee efficiency by thinking about the fee structure in terms of, in some cases, you can negotiate a lower management fee with a performance fee that's capped. Also, I think we've also been able to negotiate management fees down. I believe earlier in this year, a prime example is in the real estate space where, Dinesh was able to get the management fees dramatically lower on a new investment. And one of the last levers is liquidity in size terms. I think, in some cases, you can get lower fees, agree to lower management fees by agreeing to less liquidity or longer lockup. So yeah, so just again highlighting, fees are primarily a function of asset allocation. However, there are levers with which we can pull to increase the efficiency there. So next page. So just digging into the numbers a little bit, right? I think the main point that we wanted to get across is control what we can control, and that's focusing on management fees. You know how much you're going to pay given the strategy or the managers you hire. So you can see, we've done a good job in reducing management fees. Over the last 3 years, management fees have gone down from 91 basis points to 71 basis points, or about, call it $2.6 million. Flipping over. So here we want to, look at what's driving the management fees. And the chart on the right, we've kind of lumped everything that's not passive and called it active, private, hedged, as well as, kind of the long-only strategies. And, it clearly shows that most of the management fees clearly come from what we're lumping in as active. And one of the key drivers of why this management fee contribution from actives has come down is just less allocation to active strategies. Passive weight has gone from 26 to 37% over the last year. A big part of that actually is driven by kind of that strategic asset allocation shift that we made in October when we went to a lot of, especially in the fixed income realm, when we went to a lot of, when we massively increased our allocation to short-term bonds passively. So next page. Here we take a look at kind of the components of these active management fees. And you can see a big portion is driven by private as well as hedged. And we've done and you can see the decline in the contribution from hedged particularly. And that's a result of a decrease in allocation as well as the actual reduction in the management fee ratio as we terminated a couple of higher fee-paying absolute return managers. Flipping over, so kind of the last slide here is, again, looking at focusing on kind of what we call the hedge strategies and seeing now that, we've dramatically reduced allocation to hedge strategies, completely eliminating them from the fixed income bucket and primarily just fixed income bucket as well as the real assets. They've gone up a little bit in absolute return, but as Prabhu was highlighting, this is going to go down to in the 5% range. And also from a global equity perspective, I think we are in the process, if not completed, getting rid of all the hedge strategies in our global equity bucket. So those things combined should help bring down the fee management ratio next year. We kind of very back of the envelope estimation of 65 basis points for management fees, which we think should be in the vicinity of, kind of our long-term goal for management fees. With that, we're done with this presentation, but open to any questions regarding either this one or the larger fee
Yeah,
report.
can we go back to slide 2? I have a really interesting question to ask.
Yes.
Hey, you already probably know what it is. So did you ever plot fees as a percent of assets under management on one axis and then actually assets under management on the other? Because, the old industry saw is, well, the bigger you are, the more you can hammer down the fees.
Yeah, no, but I think you can kind of see that a little bit in terms of where CalPERS and CalSTRS are.
Yeah.
They're really low because they manage
Yeah.
a lot of assets in-house and
Yeah.
they get economies of
Is it
scale.
too hard to prepare that chart? Could you bring it back maybe at the next meeting or something? Because
Yeah,
if I were the city council, I would look at this and say, well, you're not doing really well on fees, right? But if in fact there's a high correlation between size of,
Sure.
we're
Yeah.
pretty tiny. I just while you were talking, I quickly looked up ACER and CSAR, and they're both near 10 billion.
Right.
So, and of course, CalSTRS and CalPERS are bigger than God, so.
Right.
Yeah.
But
Do you
remember-
have the AUM data?
I think so,
Pretty
yeah.
easy to look it up. I looked it
Yeah.
up just too
Yeah.
right away. Yeah. Would
Yeah,
you
no, I
bring
think
that back?
this database has both the fees as well as.
Oh, really?
AUM.
Yeah, could you bring back just a simple XY plot? It'd be really interesting
Sure.
to see, because it might be helpful to show that to city council too.
Yeah, so I think there's
Yeah.
two things there, right?
Yeah.
Definitely, the larger you are, the more economy of scale you have.
Right.
But again, also it's a function of asset allocation, right? As it pertains to pensions, I think San Jose has a little bit more weight in private strategies, which tend to be more expensive. So then, the question of, hey, we're not doing as well, given our size, it's more from a fee perspective, right? And clearly, we're not managing just to minimize fees, we're managing to, get the best risk-adjusted net returns, right? So
that's a hard thing to show on a chart, because it's almost sort of subjective in a way. Yeah, I know exactly what you're saying.
Yeah.
I would agree that, I think a chart with size and fees, because you need to see economies of scale and the leverage that you have as a 300 billion type fund of CalPERS, CalSTRS.
If I can add, that's a great point. There's two things that happens when you're larger, right? One is you can actually negotiate lower fees.
Yeah.
But the more important point, which actually has a bigger impact on fees, is the ability to bring those assets in-house,
Yeah.
which is
right.
what both CalSTRS and CalPERS do. And as I understand, I was just looking at the state of Wisconsin. I know it's a Veris client. More than half the assets are actually managed in-house. Again, that's a $100 billion plus plan. So
Sorry.
Well, let me just jump in real quick, just finish that off. So I totally get what you're saying. It'd be very interesting to look at the chart and pull out those outliers. We might be an outlier. We might say, yeah, because we sort of have this novel thing we're doing which requires more fees. Somebody else might be in the opposite, and we might say, man, they just pretty much invest in index funds and they select them themselves. So I know this is not a homework assignment that we won't spend a lot of time on, but it might be very instructive. Not so much, I think, for us, but for the city who sees fees as evil. And so two things. One is show them how fees work, and that's economies of scale. And the other one is show them that different people have different strategies to take advantage of fees and then to minimize fees.
One thing I would add about the difficulty for data gathering is because only a handful of our peers actually produce a comprehensive fee report.
Yeah.
So we can put it together based on CAFR data, but even if you look at our ORS 2018 CAFR data, it's less than half of our actual fees. So it's going to be the same way for many of our other peers.
Well, and that may be the chart may look like an explosion in a paintball factory, in which case we say, we're doing the best we can to report this and nobody else is, and that
Right.
gives us credibility too.
So let me add to that. First of all, I can't emphasize enough what David just reported this morning, which the total fee is going to be mostly directly related to the asset allocation. So that's given. I think Prabhu's statements about economies of scale and bringing staff in-house is another good comment. It makes a lot of sense. But I want to touch on your last statement, Trustee Lanza, because that is part of the, I don't want to call it hidden message here in this table, but you're right. I've been trying for years now to make a point that, yes, we have whatever, 2018, 1.22%, but that's because we do an excellent job as being very transparent about reporting the fees. The story here is if you look at the CAFR, now, understanding that asset allocation will lead that, total fees, I think one thing that you should take out of this table is that if many, as Dinesh indicated, about 50% of our fees are in the CAFR, the other 50% are in the total fee report. If you apply sort of the similar ratio, it's not going to be quite the same because their allocations are different than ours, but the point being is that people cannot just look at the CAFR and assume that we are twice as more expensive as anybody else, because everybody else have fees like we do. They're just not capturing it in the CAFR information. And that's a story that have to be explained, because otherwise, granted, we provide the fees and council and stakeholders can ask questions and indicate that we may be expensive. But it's important to understand that we cannot compare the comprehensive fee report that we produce with the CAFR information from our peers, because that would not be apples to apples.
Yeah.
So thank you for taking the time and providing that kind of information to the
And as
to
it
the
pertains to presenting to the city council, I mean, is it worth just highlighting or stressing management fees? So that gets us closer to the CAFR numbers, right?
Yes.
Because incentive fees are what they are, right? I mean, if our private equity strategies blow it out of the water, you inherently pay more incentive fees, which is not necessarily a bad thing. So it's like, back to we're going to control what we can control. And that's why focusing on management fees in any presentation might be the way to go. And
Yeah, I
try to
think-
de-emphasize
yeah.
total fees, right?
Yeah, I think that's right. Sort of that old think globally, act locally thing, sort of grade absolute versus grade on a curve. Yeah, everybody pays fees. Okay, so too bad, right? If you don't like that aspect of capitalism, I'm listening, right?
Mm-hmm.
Now the question is, how are we doing relative to our peers?
Yeah,
What's
yeah.
the grade on a curve, right? What's the think locally?
Mm-hmm.
I think we have a good story to tell there, which is what you're saying. I agree 100%.
David, when you said we can control what we can control, is the we staff or the we staff and the board?
Well, I think the board is asset allocation. We
Yes.
staff is how you implement the asset.
Okay, so when you say we, you're referring to staff.
I think so.
Okay, I just wanted to make sure that was clear.
Yeah.
Thanks.
Just a question, when you have the lever to reduce the fees that you can control, do you do that only when there's an event, as in a re-up in a fund, or can you do that midstream and say, hey, we need to have some discussions here, or there has to be an event, that there's raising a new fund, or there is some existential crisis that calls a renegotiation?
We can certainly do it midstream. We don't have to wait for an event. But if there is an existing manager and we have a certain arrangement, we've actually done that with Makita before. We've actually gone to an existing manager who's actually produced good results, and we want to continue with that manager, but we went back and renegotiated the fees. So we can do that midstream, but changing managers also gives us an opportunity to go back and say, our philosophy is we prefer base fee and performance fee, and we look for managers with those characteristics.
And I think having this report also makes sure that our team has enough awareness of all the fees that we do pay. And you'll also see in our asset class reviews on a quarterly basis that we are reporting how much fees we pay. So it's something that we're always thinking about.
By the way, I do want to commend you guys, David and Dinesh. This is a very thorough and a very detailed report, which I think, everybody will appreciate.
Thank you.
It's tremendous.
And just as I know that we, as in staff, myself, but really it's going to be led by, I was going to say trustee Palani, but it's really the CIO Palani. We're going to be going to the city council on October 1st to present the fees. So.
Any other questions? If not, thank you, Dinesh,
Thank you.
David.
Thanks.
Appreciate it. All right, on to 2D, presentation calendar, first quarter 2019, private equity report by Newberger Berman. Good morning, Brian.
Good morning. So we have Casey Boyer of Newberger Berman on the line to present the report.
Casey, are you there?
I am here. Can everybody hear me?
We can.
I am here on the line. Can everybody hear me?
Yes, we can, Casey. Good morning.
Okay, good morning. Thank you for having me. We always appreciate having the opportunity each quarter to present and give you a quick update on how everything is looking in the program. Hopefully you have the presentation in front of you. I will just hit some highlights. I won't touch on every page, but kind of give you the overview summary. So turning to the first page, this is a quick summary of the private equity program in total, showing both the legacy commitments and now the Newberger portfolio in partnership with San Jose, and then kind of the total investments. The one thing I think is the big takeaway from this page, since we are only a little bit over 2 years into the program, the most notable item is that we are continuing commitments, and we are exactly on pace for what we have planned. So this is the Q1 update. So over that quarter, we made 2 additional primary investments. So now we have a total of 16 primary investments within the Newberger portfolio, and we made 2 additional co-investments. So we went from 15 co-investments to 17 as of the end of the first quarter. The portfolio continues to develop. So with commitments, we are now, as of the first quarter, about 60% committed, and a little uptick in value already with a net multiple of 1.1 times. Moving on to the next few pages, these are benchmark pages that we've provided, and they are at an underlying fund level. So these are the actual funds in the legacy portfolio and how they are comparing via the appropriate benchmark. So looking at both IRR and the multiple of invested capital, you can see the legacy investments on both pages 2 and pages 3. On page 4, you see the Newberger investments at an underlying level. Not at this point quite as relevant, given a lot of the funds we've just invested in, a lot of them within the last year, and then a couple you see there that have some initial benchmarks, but you know, even those funds may have only one investment or a couple investments. So this page will continue to develop and give you a little bit more insight as time goes on. The next couple pages, 5 and 6, are a good overview of just the diversification within the portfolio by vintage year. You'll see page 5 is by commitment and page 6 is by the actual net asset value of the investments. Again, on the Neuberger side, early, and I think what is most notable here is just the fact that we are continuing the diversification by vintage year and making sure that the plan is investing across years. The next few pages go through performance in a little bit more detailed view by asset class and then also by investment type. I'll take you to page 9 because I think this highlights a little bit of where early returns are coming from within the Neuberger portfolio. So you can see on page 9, this shows the multiple of invested capital returns as of Q1, and you see the secondary is at 1.4 times, and the co-investments are at 1.17 times. And that's exactly what we would expect early on in performance. We would expect those two investment types to kind of drive that early performance in the portfolio. So we're happy to see that that's actually the case here. And then I'll just take you to the last few pages. Page 13 and 14 is a very detailed view of all of the investments. You can see the capital that's been deployed, how much unfunded there is at the moment. And then on the very last page, you do see the gross IRR and multiple for the legacy investments, Neuberger, and then a total of the entire portfolio. So overall, good performance, and I'm happy to take any questions if anyone has any specific questions.
I had a question on page 4, investment 31, where you have a big, I guess it's just a mark-to-market that's down. And
yeah, on this one, so this fund specifically, as of Q1, they had one investment that was being held at cost. They also hadn't called capital from us on that transaction. They were using a capital call facility. So really what you're just seeing here is a combination of there's not a lot of capital called. It's very early and there hasn't been any write-ups in that one portfolio company as of now. And of course, you know, there are some management fees in there. So it's unfortunately just too early to really tell anything at this point.
And Casey, when we talk about the J curve associated with funds, this is kind of what we mean, right?
Casey, did you hear
I'm
that?
sorry. I did not hear that fully.
I said when we talk about the J curve associated with private market funds, this is exactly what we mean, where early on the performance looks terrible, but it's actually just cosmetic, and over time we expect it to normalize.
That is correct. Yeah, there's definitely J-curve effect going on here, and that is simply to mean that the investments in the portfolio are held at cost because there's, you know, they've been made within a very short time period. There's no reason to write them up, and so a combination of a portfolio held at cost and some early management fees and expenses, unfortunately lead to the J-curve. And that is one reason why we like to put co-investments and secondaries into the portfolio, because it does help to mitigate that on an overall basis. So while you see some funds in the J-curve, we hope to mitigate that at an overall level for your program through the use of co-investments and secondaries.
All right, is there any other questions for Casey or Brian? If there isn't, then thank you, Casey, for calling in and providing that report. Thank you, Brian.
Yes, thank you for having me.
All right, so 2E we deferred, and so we'll just go ahead and move to 2F, presentation of calendar second quarter 2019 performance report for the pension plan by Makita Group. Good morning, Laura.
Good morning. How are you?
Good, and yourself?
Doing well. So does everyone have the quarterly review? I'll start out with world markets on page 4, just to provide the backdrop for performance for the second quarter. It was a really strong quarter. The U.S. Federal Reserve and also central banks around the world were signaling that they were open to more easing during the second quarter. That led to a lot of markets hitting record highs. Energy did decline. You see the Bloomberg Commodity Index was the only negative major asset class during the second quarter. Since the end of the second quarter, since June, we've had more exciting markets again. You've had a lot of continuing global trade tensions with tariff conversations breaking down. Treasuries rallied quite a bit. The yield curve has been inverting a couple of times, once again on Friday, which can be portend recession in the future. China also devalued their currency and cut down and eliminated U.S. agricultural imports. So we've had ongoing trade concerns since the end of the second quarter. You did see the U.S. Federal Reserve cutting rates by 25 basis points on July 31st. And the market implied probability of a rate cut in September is at 100%. So certainly a lot of expectations for further easing. We've had a lot of news coming out of Brexit recently. There's been increasing discord. The Parliament wants to pass a law stating that they can't leave the European Union with no deal. So that's causing problems. I read a funny quote about how he wants to have a new election now rather than after a no-deal Brexit when everyone is eating barbecued rat. So that's causing increasing news headlines. That said, the past few days, many folks think that trade talks are improving. There's been an announcement that there will be new negotiations in October in Washington between the U.S. and China. So the past several days have been really strong for markets. In fact, I had written down what the quarter to date since June 30th returns were as of 2 days ago, and then needed to update those because yesterday was such a positive day in the markets. So we're now looking at, in particular, fixed income having done quite well. REITs, which are driven by many of the same factors as fixed income, have done well. And you see the S&P 500 about flat for the quarter to date now since the end of June, which is also what we'd predict for your fund. There was a positive return for your fund, your pension fund. Our estimate in July, a negative return in August, and then a positive return in the first several days of September. So we see a fiscal year-to-date return right now of about flat, which of course is not a good thing, but given the global market headlines that we've seen since June 30th, is better than could have been happening. So we have a lot of other market data slides as usual that I'm happy to take questions on. Feel free to pursue or peruse at your leisure, but I'll skip ahead. You know that we have the watch list in here, nothing new to note. We put managers on the watch list when they're underperforming. That gives us and staff a sort of a nudge to continue to monitor them, which we are doing. But I'll skip ahead to your fund's specific performance, if that's all right with you, which starts on page 22. So the total fund value as of the end of June was at $3.6 billion. This is on page 22. Asset classes were all very close to their policy targets. Despite net cash outflows of $57.2 million in the second quarter, the value of the fund went up by $43.3 million during the second quarter. Taking a look at performance, starting on page 23, the total fund performance was 2.7% during the second quarter. That was outperforming the policy benchmark, the investable benchmark portfolio, and also the low-cost passive portfolio. It was behind a 60-40 blend of global equities and bonds, and fell in the third quartile of the peer universe. Looking at the fiscal year, the full fiscal year return was 4.3%, slightly behind the policy benchmark, ahead of the investable benchmark portfolio, and also in the third quartile of the peer universe. Nearly every asset class outperformed its respective benchmark during the second quarter. And we also saw really strong returns from your active managers. I know that that was part of the discussion in the fee report, was active versus passive. We have worked with staff, and staff has worked hard to concentrate your active assets in managers that are actually having, a good chance of outperforming, and that has been the case. So individual manager performance starts on page 27. Only 2 of your active managers are below their peer median since you hired them. So very strong manager performance across where you've decided to pay fees for active managers. You can take a look at the 2 artisan funds within global equity. Artisan Global Opportunities in particular is in the top decile of the peer group since you hired them in 2013. So very strong, persistent outperformance. On page 28, you can see their performance for the quarter was in the 12th percentile of their peer group, up 6.2% relative to 4.9% for their benchmark. This is a relatively concentrated portfolio where stock selection is going to influence the outperformance. They had some good investments in the technology industry, particularly around digital payments, that performed well during the second quarter. Looking at U.S. equity, you can see U.S. equity for the year-to-date period, so the first 6 months of the year was up 18%. And so when you look at your fund's performance relative to other peers out there, really how much a fund had in U.S. equities was the primary driver of returns recently, just given that huge outsized performance for U.S. equity in particular relative to really all other asset classes. Cove Street Small Cap Value under U.S. equity on page 28. If you recall, a few quarters ago, we were talking about whether or not to terminate Cove Street because of poor performance over all trailing time periods. They've done so well recently with a return of 20% for the year-to-date period that now, nearly all of their trailing time period peer rankings are in the top decile. So it just shows, this is a relatively concentrated portfolio where just a few stocks really drive the returns. And it was a good decision on staff's part to recommend holding on to this manager. They've outperformed by 14.5% for the fiscal year period. Again, concentrated portfolio. They had some insurance company exposure that did quite well recently. Flipping to the next slide, under emerging markets equity, this was another bright spot in terms of outperformance recently for the quarter and year-to-date period. GQG, Global Emerging Markets, this is a good story. A manager where someone spun out of another shop was sort of an emerging manager. We were able to negotiate a really, really attractive fee. And sort of there was a bit of risk involved with backing someone who just spun out of another shop, but we did a lot of work on them along with staff and believed in the infrastructure and this shop in particular. Now they've gained enough assets that they're looking at closing the product very soon. And you can see GQG was in the first percentile of their peer group, so the top 1%, with a return of 6.7 relative to 0.6 for the emerging markets benchmark. Since inception, they've more than doubled the emerging markets benchmark since you hired them in July of 2017. Another bright spot for active management was marketable alternative equity on page 30. As I mentioned, U.S. equities were up 18% year-to-date, and marketable alternative was only up 9% year-to-date. So there was a big difference in how those asset classes performed. But if you look at your specific managers, double the benchmark for the quarter, and many times the benchmark for the fiscal year. So marketable alternative was at 2.6% relative to 0.3 for their benchmark. I'm going to skip over the next slides that we just talked about, private equity and some other asset classes that we recommend looking at on an IRR basis. So we'll skip to page 35 to go look at the traditional asset classes again. At high yield and emerging market debt, about middle of the road performance here, emerging market debt was up 4.2%, which matched the peer median. And then I wanted to point out on page 36 that immunized cash flows were funded during June. So if you recall, this is an allocation that's designed to be about 5% of the portfolio, and the idea is that you know that you can pay benefits for a certain period of time, so it makes more sense to take risk in the rest of the portfolio. So you can see Insight was funded with around $180 million during June. As always, we have a variety of other types of exhibits throughout this report. I'll skip to page 44 just to look at attribution for the 3-month period. As I mentioned, manager selection in particular was very positive during the quarter and was the main cause of outperformance relative to your benchmarks for June, the quarter ending in June. We look at different time periods as well, and then something else that I wanted to highlight is on page 50. As you know, your fund takes less risk than many peer funds. So taking a look at page 50, you can see that the total fund return of 4.3% was below the universe median return of 5.4%. If you look at annualized standard deviation, the total fund standard deviation of 7.1 for the trailing year was below the peer median of 8.8. So then if we look at the Sharpe ratio in the third column here, you can see that that all equaled out to a similar risk-adjusted return to your peer group. So lower return, but also lower risk. As I mentioned, lots of additional slides here that I won't go through in detail, but happy to answer any questions.
Any questions? All right, if no questions, we'll move on to the healthcare trust.
Great. So the individual asset allocation and performance for the healthcare trust starts on page 20. The total value of the fund as of the end of June was $148 million. It was up about $3 million from the end of March, despite net cash outflows of $0.1 million. And you can see that the allocations are currently very close to their policy targets. Taking a look at performance, you can see that for the quarter period, the healthcare trust's performance was directly in line with its policy benchmark. And for the fiscal year period, the return was 4.8%, slightly outperforming the fiscal year benchmark. As you know, your healthcare trust return targets the same actuarial assumed rate of return as the pension, which is a bit unique. Many healthcare funds are more conservatively structured. So typically in upmarket environments, this fund will look very good relative to peers. If you look at the year-to-date period, the healthcare trust was up 10.6%, which trailed the policy benchmark, but was in the top quartile of the peer group. And that's just a function of being a bit more aggressively positioned, which was a good thing for the year-to-date period in 2019. All of your asset classes in this portfolio, with the exception of commodities, outperform for the quarter-to-date period. And we've seen, as I mentioned, really strong returns in many asset classes year-to-date. And this healthcare trust has the same underlying managers in public asset classes as the pension trust, so I won't go into them in detail since we've already discussed active managers on the pension.
Any questions?
A general question. I mean, given what interest rates are doing globally, are you seeing more interest in gold as an asset class? I mean,
That's a good question. I think there's always been folks that are interested in gold. The way that we've tended to have clients access gold is through active managers that can hold gold as a portion of their portfolio rather than as the entire portfolio. I would say depending on the market environment, we get regular questions regardless of how things are going. I wouldn't say we've gotten more interest given the interest rate environment currently.
All right. If there's no other questions, thank you, Laura.
Thank you very much.
Appreciate it.
Mr. Chair, Jennifer is literally on her way down, and there she
There she
is.
is.
I think they call that timing. So,
All right. We'll go ahead and then start with old business, go to 3A, discussion, action on request from POA regarding conducting an actuarial study to determine the impacts of eliminating the remarriage provision under San Jose Municipal Code 3.361200.
Thank you, Mr. Chair. So you may recall this item came before you a few months ago with a request from the Police Officer Association to provide, to allow Chiron to do this study. Jennifer is here this morning to speak to you on the request on this issue. Generally speaking, you have 4 items attached to your agenda, to your iPad. And so you have the memo that was produced by the city about 6 weeks ago, specifically asking your board some questions and a request to issue a resolution. And then you also have before you the letters from the POA actually asking for this study to be completed. And finally, the actual analysis by Chiron, in which I think if you go to the last page, it's a 3-page analysis. I think generally speaking, it indicates that a change in the language of this particular situation would not result in an increase on the plan. But with that said, I'll turn it over to Jennifer so she can introduce the request from the city standpoint. Jennifer, good morning.
Morning, Jennifer Chambry, Director of Human Resources and Employee Relations. So as Roberto said, we had requested that Chiron do an analysis on this to determine whether or not there was a cost to making this change. And they've come back and said that there is no cost. And that is because of the city charter provision where we can't do any sort of benefit enhancements without going to a vote of the people. So because there's no cost, we would not need to do that. But our city attorney's office would like that the board adopt a resolution to that effect, just confirming that there would be no cost to this.
Go ahead, Jeff.
Speak briefly on the subject. In general, benefit changes are up to the city, not the retirement board. And usually we would, tend to draw a line between benefits administration and benefit creation. There are times when it makes sense for this board to get involved. Obviously, this board reviews the, code changes to raise issues when it sees it. When we got involved in harmonizing the new Tier 2, I actually worked with the bargaining units in the city to help make sure that the code was written in a way that could be administered reasonably. In this particular instance, I mean, fundamentally, I think the reason the city asked for this is that they have a charter provision that says there shall be no enhancements of defined retirement benefits as of January 1st, 2017, without voter approval. And that's why they commissioned this. I would advise the board that I don't think this board should have an opinion one way or the other about whether that provision has been met or not. I don't think it's this board's function to decide what is in a benefit enhancement and what is not. Okay. Now, having said that, we've gotten the analysis from Chiron as requested by the city, and the analysis speaks for itself. So, the city now has that analysis, and to the extent that it wants to use that analysis for whatever it's going to do next, that's perfectly fine. And to the extent that this board wants to acknowledge that it's received that it requested the analysis, it got what it received, and it says what it says, certainly the board can do that. Or the board can go further. The board can say whatever it wants to say about the analysis. I personally think the benefit enhancement question is almost a philosophical issue here, because we're doing a cost analysis that turns on incentives. You'll see from the actuary's report that the reason they're saying that they don't really see an increase in cost is because right now nobody's getting remarried because there's such a financial disincentive to do that. So that's one thing. The other thing is it a benefit enhancement? Well, some people can get remarried and keep their benefits when they couldn't used to. I don't know. It's almost a philosophical question, and I don't really think it's this board's function to answer that question. I don't think the city is necessarily asking you to answer that question. I just want to make clear that whatever you do today, it's not interpreted as, blessing this under the Constitution. But beyond that, certainly you have the report from your actuary, and you can declare that you've received it, and it is what you asked for, or whatever else you want to say today. And I guess I'll just turn it over to the board at that
Yeah,
point.
yeah, so maybe just extend it one piece beyond that, and just say we've gotten it, we accept it, and makes sense to us.
Yeah, I think that's really what we're all looking for, is just to accept the report.
Yeah.
Because of the technicality of going to the voters, we just, and I get what you're saying, it's absolute, no one's gonna get remarried as long as the penalty stays in place. But if today someone got remarried, and tomorrow we put this in, well, now it's a benefit increase, because it now has a cost, but no one's gonna do that. So I think just accepting the report is really all that we need. I mean, I don't think we need much more than accept the report, and then this board can stay out of the whole benefit structure of it.
So, couple things, the charter language actually specifically says the board's actuary, so I think that's why the board is getting involved in this.
Sure, and I didn't mean
yeah.
to suggest that they shouldn't, yeah.
Okay.
Yeah.
And then, so we are looking though for you to adopt a resolution. So if you're adopting a resolution accepting the report, I guess that's fine. But I think that that's something that the city attorney's office is looking for, like a formal action by the board. In case there's a question later about it.
Yeah, and I think if the board wants to adopt a resolution accepting the report, I think that's perfectly fine. I want to be clear, I'm not saying that that's a problem. I just wanted to make sure that it's understood that I don't think this board should have an opinion about what does and does not constitute a benefit enhancement, that's all.
Well, so, before, I'll go ahead and make the motion in just a minute. So is there anyone around this table that thinks that the basic conclusion that Frank just talked about, in the report by the actuary is pretty sound? There's a huge penalty to giving up on that benefit, and so most people don't. Has anybody questioned that? It's like basic human nature. You don't look like you're questioning
No,
it either,
as I
Jeff.
understand
Makes
it,
sense, right?
I think the report said there's only been one instance where it happened. I don't know if it's referring, we actually had a litigation over this. This is called the Jordan claim. It was 5-6 years ago. We won the case, but it was somebody who was claiming that they shouldn't have lost their benefits when they remarried. So it did happen once. It
Yeah.
happened then.
Yeah.
But
On the fire side, not on police side.
Yeah,
This is strictly,
okay.
this is, oh yeah, let me ask
Yeah.
It would apply to both.
Well, obviously that's between you guys, but that's another question. I just wanted to be clear that this analysis is speaking on the police.
Yeah, I believe the Chiron analysis, because it was requested by POA, is
Yeah.
just speaking under police.
So-
We've not had conversations with fire about this.
Yeah, so that's an issue between the
Yeah,
bargaining
well,
units and the
obviously.
city to address, but I just wanted to make sure that that's understood. This is just police.
Yeah, I just raised the concept because
Yeah.
whether you're police or fire, I'm just saying, it happened at least once.
Yes.
You know, that particular member was not happy that it happened, and, you know, we could argue all day about the level of knowledge. We won the case. I won't get into all the various reasons. We won the case very quickly and very easily. But it happened in that case. Will it ever happen again? I think Chiron's looking at all of this and saying, there's such a disincentive for people to get remarried under the current situation that it's unlikely to happen. But you know, these are, like I said, it's almost philosophical questions about what is a benefit enhancement.
So based on history, based on our respect for Chiron, the simplicity of their argument, based on the fact that none of the trustees around the table are arguing, I would move that this board accept this report from Chiron.
Can I?
So, hold on. So, got a motion by Lanza, a motion by Lanza,
Yeah.
second by Santos.
Continue discussion.
Continue for any more discussion.
Just one thing to keep in mind for the trustees, this would only apply to those killed in the line of duty,
Yes.
and strictly that.
Yeah.
And through the chair, years ago, Carl Brady and myself, we addressed this, and it went nowhere, so I thank the POA for bringing this up. It's a rare case, situation, but why would anyone be penalized? And I totally agree. We're not passing some resolution and supporting that, we're just saying it stands on its own merit.
Yeah, and I feel comfortable with the motion, simply because we're not taking sides. I want to make sure that the board doesn't advocate for, one side of a benefit or another. That's not our job. But just accepting the report from Chiron, it's not it's not saying one way or the other, but we're just accepting the facts, and that's it. So that's why I feel comfortable with the motion.
Yeah, and the motion was in no way meant to get into that.
Yeah, we want
Long
to stay out of that.
Yeah,
You know.
yeah, yeah.
So, any other comments? If there are no other comments, we got a motion on the floor, with second with Santos. All in favor?
Aye.
Aye.
Just for, just to be clear, council, you're gonna be drafting that, language for us?
Well, actually.
Someone should, and it won't be me.
You actually want a written resolution? Oh, well,
I think that's what they're looking for.
certainly. I mean, I think it's just gonna be it resolved, the board has accepted the report from Chiron.
Yes.
I mean,
I
I don't
Yeah.
think there's much to
Yeah.
it. I think
As
it's-
soon as you
yeah.
make it available, we'll forward that to,
Yeah.
to the city. Okay.
Yep, that works, thank you.
Okay, perfect. If it's okay with the board, I wonder if we could skip ahead actually to 4C, discussion and action on city plans to release the additional disability panel request for proposal, while Jennifer is here.
Did we get the full vote on that, by the way? I heard some ayes, but Roberto asked a question.
I
Just wanna make sure-
apologize.
I don't know if the record reflected, was it unanimous?
Yeah. It
Okay,
was,
I
yes.
just wanna make
Sorry,
sure.
yeah.
Okay.
It was. So if the board's okay with that, let's go ahead and jump to 4C. All right, Jennifer, do you want to take this, or?
Sure.
Okay.
So we would like to redo the RFP for the disability medical panel and have it run by, within our Human Resources and Employee Relations Department in coordination with the Office of Retirement Services. I know you guys have gone out a couple times and haven't had any luck. And just to be frank about the issue, this is language that I negotiated, feel personally responsible for, and if I have to go back to the council and say that it's failed, we can't do it, I want to make sure that we've done everything that we can to make sure that it would be successful. And I think I have the tools, in human resources with a lot of different contacts with doctors and workers' comp and those sorts of things, maybe to be able to do a little bit more outreach than was done before. So that's the thinking. We'll still coordinate with Office of Retirement Services. I know Jeff had a bunch of questions yesterday. I think it'll probably be the same RFP. I don't think we have any intent to change the RFP. It's more, I think we're hoping to do a little bit more outreach on it. But if we do see something in the RFP that we think needs to be modified, we'll definitely coordinate with Roberto and his staff on it. And ultimately, it's the board's decision. You guys will still have to make the decision about the independent medical panel. If we come up with something, it'll be your decision. It's really just us running the RFP and doing the outreach is what we're looking for.
And Jennifer, on the off chance this fails, and I actually hope it does not fail, you and I grab a whiteboard some afternoon and sit down. And if the goal of the city council is to tighten the process on the disability committee, I think you and I could probably figure that out in about an hour. We'll get Dick with us. It's not that complicated. If this fails, this was a good attempt to tighten it. There's some other places to tighten it up. And we're actually doing that on the disability committee. We're constantly turning the screws to tighten it up.
So Jennifer, the only difference about this process versus the last two is that your office, yourself, and the unions negotiated something or come to an agreement, and then Retirement Service put out the RFP?
So,
Yeah.
yeah, Retirement Services did the RFP.
Okay, and this time you guys, your office is putting out the RFP?
Yes.
But then, once RFP goes out, let's say we get some people, then does the Retirement Services staff take over the process, or do you guys still run the process? What happens from there?
So I think we'd run the process. We haven't had a discussion yet about, who would be on the panel. I'm not wedded needing to be on
Yeah.
the panel either. I think that could still remain the same. Really, what we're looking for is for us to run the actual RFP process and do the outreach.
Okay.
So, the Muni Code, so first of all, most importantly, the Muni Code requires the board, and Jennifer's already acknowledged this, that the Muni Code requires the board to make the ultimate selections. It's actually a 6 out of 9 situation, to select people to the panel. It does also say that, it says individuals shall be recruited to serve on the independent medical panel by the board, using the city's established request for proposal process. So certainly the city can help in like a marketing outreach, trying to find people, trying to get the panel filled. Maybe there's more work to be done behind the scenes in terms of what this RFP looks like. But one question I would have today is whether it's anticipated that this board would approve the RFP before it goes out. Or whether, and I ask that question because I think depending upon the answer to that question, it leads to a lot of other questions. So if the board, for example, if the board is ultimately responsible for picking the medical panel, and under the Muni Code, it's also responsible for recruiting the medical panel. You know, ordinarily, when you send an RFP out, people that are responding to it are expecting the board, or the issuer, I should say, to abide by the things that it's saying. Like, for example, if you were to put compensation, expected compensation for the medical panel members, the board can't be bound to that if it hasn't issued the RFP itself, if it hasn't approved the RFP. I could see things like that arising. And then there's also issues about who brings it to the board, how they bring it to the board, once you've got people responding. I don't know if we have to answer all these questions today. I just want to identify them and make sure, I mean, I don't think any, I think, let's see, this says discussion and action, I think.
Well,
But-
that was me.
Yeah.
I always going to include an action, so that if the board feels like making a motion or some kind of action, you can do that. That doesn't mean that the board has to do anything today, other than,
That's
when
right.
Jennifer approached me, I said, I want the board to be clear what the request is, and, you know, if your board felt that you didn't want the city to get involved, then you would take an action and make a motion. Otherwise, if you're okay with it, it would be fine to just direct staff to work with the city. I'm fine with that, but that's why I included the action
That's
in
right.
case
No,
they
and
wanted
I
to
think
make a
I think
decision.
that was correct. I was just gonna point out, it's on the agenda as discussion action. I don't really think the board should take any action
Yes.
today. In the sense that, well, I don't think there's anything that needs to be done at this time. I just want to raise these issues so that there's no misunderstandings going forward. There probably is some work that needs to be done behind the scenes about, you know, and we may have to bring this back to the board at a future meeting about what the RFP process looks like. I mean, to the extent that the city wants to play like a marketing role and an outreach role and try to net people that we didn't net last time, I say go for it. But just in terms of how that process unfolds, who's in charge of that process, who approves the process, that might require a little bit more discussion. Because I think if the city went off and did it all on its own and then came back to us later, we might find that there was a lot of time wasted and possibly some legal problems, you know, in terms of
So,
expectations.
like I said before, that's absolutely not the intent.
Yeah.
We'll work
Yeah.
very closely with retirement services. We wouldn't do anything that, you know, you weren't comfortable with or that you didn't think was appropriate, so.
But I do have a question. I mean, I appreciate you said that, and I think you mentioned that you fully expect to have the same RFP that we issue. If there are some changes that you feel may be needed, then we can discuss them. But
Yes.
I think for Jennifer's sake and my sake, I think I'm gonna ask the board, are you asking to see the RFP before it goes out or not? We need to know that, because I'm sure the city wants to move relatively quickly on this.
Yeah.
And if you want the board to sit in, then really, we're talking about your board meeting in October, yes, and then the Fed board meeting in October, because the Fed in September does not have a regular board meeting, they just have a retreat. And so that would impact when they can issue the RFP for about another 45 days. So I just want you to be aware of it.
Right, and you didn't approve the previous
Yeah,
RFPs,
that's what I
right?
was just
I
So
don't
know why
think that
would-
we did,
I
but,
don't
you know,
recall
since
this
it was
board
raised,
seeing
yeah.
the RFP.
No.
Actually,
Yes.
we just approved that an RFP would go out. So,
Yes.
I mean, me personally, I think if the city has to make a change, that it would go through your shop, and it doesn't really need to come to this board.
I do not recall whether your board approved or not. I know we discussed the matter. I don't know if the RFP was actually part of the agenda or not, but I know that we didn't go through the
I don't-
RFP to review it.
Yeah,
That
I don't
much
recall
know.
ever seeing the actual RFP,
Yeah,
and I
but
wouldn't know what to put in
Since
it
council
anyway,
raised
so.
the issue, I want to be clear, because, you know, I mean, I want to make sure that we know what the rules are so that we can play by them.
So Jeff, a no action would give permission for Jennifer
Well, I mean,
to go forward with the process, right?
I mean, it's not about giving permission. I mean, but a no action would just, I mean, the city's gonna do what it needs to do, but the city's already told us that they're gonna work with us
Yeah.
internally. And I think that it's a good point that was raised in terms of like the level of detail the board's gonna look at an RFP anyway.
Yeah.
I think the key is just that the board and its representatives, I think there's an understanding here that Roberto and we as council and Jennifer, we would all work together, you know, to make sure that nothing happens that's gonna cause problems
Yeah.
down the line. So beyond that, I don't think a no action means anything in particular.
Okay.
Just you
I just want
understand
to make
what's
sure it
going on.
doesn't slow down the
Yeah.
process, that's all.
Yeah.
All right.
Okay,
I'm fine with that. Are you okay with that?
Yes,
Me too.
perfect.
All right.
all right. If there's
So,
any-
I have one question, Jeff. If this RFP also does not net any candidates. What's built into the code? We just keep going through this over and over again?
Well-
What's the fallback?
There's nothing really built into the code right now. So the code was written as a change to the plan to create this thing that's called the independent medical panel. And in theory, we're supposed to have an independent medical panel now instead of the disability committee and the board. But just as a practical matter, we just haven't been able to fill it. So, the reality is we have to keep going with the disability panel and the board because we have no other option. We have to continue retiring people that are entitled to retirement. So at some point, I took from some of Jennifer's comments earlier, at some point, I'm assuming that the city would revisit this medical panel if it simply can't be filled. And it sounds like this is sort of, maybe not the last, but it sounds like it's, one last effort to get a medical panel in place. And if it doesn't happen, the city has to do some hard thinking. And in the meantime, we're going to keep retiring people under the procedures we have in place because that's all we have.
So just a little bit of history for those that weren't here. We negotiated this under the settlement, and it had a construction of this board. We went out to the first RFP, that's what Jennifer referenced, 2 RFPs. We got no response. We will back to the table, we renegotiate the composition of the board, we released some of the restrictions, and we went out to a second RFP. So in the event that this third one would not work, we would basically go back to the table and renegotiate the construction of that board. But this is to give Jennifer and HR an opportunity to go, okay, we exhausted all possibilities, and we still can't get anyone qualified under this, restrictions, so she can get the power she needs to go back to the table with the unions and renegotiate it. So that's how this would work.
I don't know if this is doable, maybe it's not, but when you go into that room to negotiate, I'd very, very much like to be in that room. I've spent years of my life working on this disability committee. with
Careful what
Dick.
you ask for.
I know, under Dick's excellent leadership. And if the goal is to tighten up the process, I think Dick and I can, in a very short period of time, tell you precisely how to do that, because we've been doing it for some time. So, I think I know what the city's goal is, I think I know what the union's goal is, and I think there's a middle ground to be sought. It's probably not where you're looking for it. And I say that and I think Dick will back me up. We've worked really hard over the years on this, Dick, and it's a very tight, I think Roberto will back me up. It's a pretty dang tight process we run in that room, isn't it, Roberto?
It is, but I do wanted to add, as much as I would love for you to be involved in that process, that since you
I can't,
and Dick, both together comprise the governance committee, the disability committee, that I don't think it would be appropriate for both of you to be in the same room, because then
that's a good
that would
point,
be a committee meeting of disability. So you will have to choose which one.
Well, maybe we'll
And since
invite-
you are so excited
maybe we'll
about
invite them-
joining,
well, maybe we'll invite them to our committee meeting and have an open dialogue.
whichever way
that's
you
a
want to
good
handle
catch.
it. But I just
Good
wanted to
catch.
mention that.
Good catch, Roberto.
I'm sure they have no problem with having you at a meeting that they have. They would love to have
We
you
have the
there.
best pastries in town.
Very well.
If I could just maybe there is one piece of action that might be helpful to the process, is that if the board were to delegate to staff, the ability with assistance of counsel, if staff determines that after working with the city, that it would be prudent to reissue or reopen the board's own RFP, the Ps that have already been issued, as a way to carry out this process, to the extent that we determine that needs to happen, that to direct staff or authorize staff at this time to do that, only if it determines it's necessary. That you're not necessarily expecting it to happen, but I heard some comments about the 45 days and not wanting things to go too long, and I'm thinking forward that if we end up working behind the scenes with the city to try to make this happen, but ultimately determine it sort of needs to be issued under the imprimatur of the board rather than the city, that we at least have the ability to do that.
Would it work to say that this board directs the Office of Retirement Services to work with HR to see if needed to reissue an RFP or evaluate if one is needed? Would that work?
Yeah, or just to work with
To work with
I think all we want to do is to be able to work with the city. I mean,
Yeah.
I think
Yeah,
we,
just-
we had no problem
just-
with them issuing the new, I don't think that, I have heard that there's any issue with the city issuing the RFP, so I just want to make sure that the motion is appropriate so that
Yeah.
we don't get.
Just in terms of having flexibility, that's
Yeah,
what I'm saying, just
sure.
having the flexibility to get it done if it's needed to get done. That's all I'm
I'd
suggesting.
like to make a suggestion, even though it wouldn't be popular probably with the city or other people, but listen to some of those work comp attorneys, just for input would be helpful. Because we have resolved many issues working with, just listening to their points of views and issues that, and taking and sharing with the panels and the doctor and things like that, that has come up along the way. And I think that would be helpful to help speed things up or whatever the goals are meant to be.
So Franco, was that a motion?
Yes.
You want to repeat it real quick?
I move to direct staff to work with HR to evaluate and reissue, if necessary, an RFP for the medical panel.
I'll second that motion.
All right, got a motion by trustee Votto, second by trustee Lanza. Any other comments? If not, all in favor?
Aye.
Aye. All right,
Great, thank you.
Jennifer.
thank you. We have a quick request, if we could be able to take just a 5-minute break and reconvene at 9:57. We'll start.
Very well.
All right, thank you.
Thank you.
can get the meeting started again. We're going to continue on old business, going back to old business, 3B, update on matrix of city audit recommendations from the 2017 audit. I'll hand this off to CEO.
Yeah, thank you, Mr. Chair. So, nothing much to update you on. I mean, this is the most recent update of the matrix for the recommendations. And so, there are a couple that we needed to work on, and we fully expect to be working then. They have not been implemented yet in this fiscal year, namely the one related to the communications. In fact, we have our first meeting with our communications consultant next week at our office, and we also the revamp of the website, which we intend to kick off mostly towards the second half of the fiscal year. But the one issue I wanted to raise here had to do with on page 1, which is recommendation number 5, which is related to the retirement board should establish a formal budget adoption policies and procedures that include clear delegation of authority to staff to spend plan assets subject to certain limits defined by the boards. Excuse me, that is partially implemented, and the reason for that is the city auditor have indicated to us that they are in our policies as for the budget as drafted. We did not address the difference of opinion between the boards and the city in reference to the definition of aggregate expenses, well, on those lines, right? We only in the policy stated our position. So we intend fully to bring back a policy to the governance committee and eventually to your board that would address that issue so that we can finally move that particular item from partially implemented to fully implemented. I have been in discussions with the city auditor. He's been actually very patient with me on these issues. And I also have suggested to him, I'm sure I mentioned to all of you, the former city auditor retired, and the assistant, and I don't know if you ever have met him, is now the city auditor for the city, José. And so I also extended an invitation for him to be one of these meetings in the future so that not only we can sort of talk about the audit recommendations for their audit, but also so that he gets a chance to meet you and all of you get a chance to meet him personally. So that was really all the update I wanted to provide you on the metrics. I'm happy to address any specific questions related to that particular document.
Gia?
So this document, I know you got a great system of red, green, red, yellow, green stoplight. Do we, do they review your sense of where the status is?
Yes, they do,
Okay.
and they do that. They have a process which is actually, as I was going to say, county, city-wide, and they update the city council every 6 months. And in fact, he's going to the city council in October to update the city council on all the recommendations that are outstanding, which include this audit. So they do that, and we are in communications, and we will make changes. And when we do something that we feel have met the spirit or has met the recommended statements, we will reach out to them so that we can go from non-implemented to fully implemented and everything. So we keep a dialogue,
Great.
often, yes.
Okay, great, thank you.
All right, if there's no other comments, we'll go ahead and move on to 4A, oral update from the CEO.
Thank you, Mr. Chair. So quickly, just a couple of things, and this also pertains to you, Mr. Chair. We received, there was a citywide email yesterday from this city clerk, a notice of employee elections. This one particularly is related to the Federated Retirement Board employee representative. So it's a one-page, and so it just notified everyone that this is coming on. What are the timeline for applying, and when the actual election will take place. Just a reminder to all of you, the election will take place in the event that there is more than, I believe, 3 candidates I'm not quite sure whether it's 3 or 4 or 2, but if there happens to be only one, there's no need to do an election. So we're hoping that the chair to my right is willing to apply for 4 more years at the same pay rate that we're giving you right now. And if that's the case, if there are any other applicants, obviously there will be an election, but otherwise that will not be the case. But I just wanted to keep you aware that the city clerk is already working on this issue. We also are working on the response to the grand jury report. You and the Fed board received an email from me last week sharing with you the proposed response. We have made some small changes to that response, so you will probably be receiving another one, if not by tomorrow, early next week on the latest response. Not much changes, just basically to make sure that we are in line with the specific requirements to a response with the grand jury along the lines of, yeah, we agree, we do not agree, we partially agree, we neither agree or disagree. So to start the recommendations or the responses that way. So there's not really much content changes, but when that is completed, we will certainly share that with you. We have shared our suggested responses with the city, and the city have shared with us their suggested responses. So just wanted to keep you apprised of where we at. I wanted to let you know, especially for those of you that are not members of the plan, but outside trustees, that the salary setting committee approved an increase on your stipends from 250 to 260. So you should be receiving those new paychecks, an increase from 250 to 260. That was effective.
One place.
That actually, for you, Mr. Lanza, that probably will allow for 1 or 2 more beers of your meetings.
No, that's real beer money.
Yeah, no, understood. I want to remind you that you may recall we at the last meeting we provided you with the no conflict of interest forms. They are due. If you haven't filled out your form, please do so and send it to our office. We are continue working with the city on the CalPERS defined benefit plan for our investment professionals. CalPERS was going to take their item to the city council last month. They were not able to do it. They're getting conflicting input from 2 sides of the CalPERS office, and they're trying to work through that. So I'm working diligently, keeping in touch with the city on that issue, and we're hoping that could be addressed in the near future. So I will just keep you posted at the next meeting on where we at on that particular request. The pension administration system, you know that one of the areas that we have yet to issue or to finalize is the member direct, which is that would allow the members to interact with the database and do their own, self-calculations and everything else, among many other things. And so we had a soft launch on that particular member direct to staff this week. We expect in 2 weeks to take any input from staff and then actually have a launch to the retirees mid-September with the goal of eventually branching that out to the members of the plan that are not retired, that are active members in the near future. The external auditors from Thornton are in the office. They started on August 26th, and they should be there through the month of September doing their financial audit. We have a new accounting clerk that will start in accounting on September 23rd. We also made an offer to a financial analyst to work in the investment group that we fully hope that they can start in September. And we are at the end of the process for the IT manager. You may recall that when our new deputy director was promoted to that position, that meant that we needed to do a search for an information technology manager, and we are in the process. We're hoping, cross our fingers, that we can have someone on board towards the end of the month. We're working through the process as we speak. That concludes my update. I'm happy to answer any questions.
All right, thank you, Roberto. Any questions, comments? None? All right, I'll go ahead and move to 4B, oral update from the city council liaison to the board, Pam Foley. She is not present today, so we'll go ahead and pass or skip that. Which brings us down to retirements, 5. Service retirements, Wade N. Katsuyoshi, fire captain, fire department, effective September 8th, 2019, with 27.25 years of service. Gerardo Rodriguez, police officer, police department, effective September 7th, 2019, with 26.1 years of service. Can I get a motion?
So moved.
Motion by Santos, second by Votto. All in favor? Aye. Deferred vested, we got one deferred vested, Min N. Fan, police officer, police department, effective September 11th, 2019, with 27.84 years of service with reciprocity. Can I get a motion?
Motion approved.
Motion by Santos.
Second.
Second by Votto. All in favor?
Aye.
Aye. We do have one death and survivor notification. Notification of the death of Richard Catanasso, police lieutenant, retired February 4th, 1993, died July 10th, 2019. Survivor benefits go to Martha Catanasso, spouse. And take a moment of silence, please. All right, thank you. Anybody have any comments they would like to share?
I'd just like to pass along, on behalf of the board, our condolences to the family and friends of the lieutenant.
Thank you, Nick. All right, that moves us on to committee minutes, reports, and recommendations. Investment Committee, oral update from Chair of the Investment Committee. Gia.
We've already discussed, the various things like Allborn but the most important thing that we discussed that CIO Polani will bring to the board eminently is the venture capital program. So we had some extensive discussions around the potential proposed approach. He had different options, and so he will bring that to the board shortly. And we also had a discussion on public assets as part of his annual review of the different sub-asset classes, which I would commend him for doing. I think he's on plan with reviewing all the different asset classes, and we had a pretty extensive and pretty in-depth discussion on that. And that's it.
All right, thank you, Gia. Next meeting will be October 22nd, 2019. We also need to receive and file 3 different minutes. Minutes from May 28th, 2019, Police and Fire Investment Committee meeting. Also, the Joint Investment Committee meeting on May 28th, 2019. And the third receive and file will be June 21st, 2019, Police and Fire Investment Committee meeting minutes.
Let me just add that
Yeah.
we are going to go before, there's some working sessions with the city council and mayor that's happening. I think it's just to kind of get a sense of what we are getting closer to us as a board. It'll be with me, the chair of IC and chair of the board and of Federated and Police and Fire, and Prabhu and Roberta will be there, so we will be talking about some of the things that we discuss here, such as the fees, will probably be a topic of discussion.
Okay. That starts in October, right?
Yes.
Okay.
You're referring to the retirement task force?
Yes.
All right, audit, Lonza, Drew.
Yeah, we had a good meeting a couple of weeks ago. 2 things really on the agenda. One is, of course, as always, the pension administration system. Maybe Barbara will weigh in with just a word or two, but the general gist is a couple of months ago, we got through the big hurdle of turning it on. It hasn't melted down, it hasn't exploded, and as Roberta pointed out, we're bringing on the final pieces, which are all the user interface. I don't know, Barbara, maybe you want to give everybody a minute or two on how it feels to you to finally be out from under this cloud.
Well,
It's still cloudy, but she's working through it.
the prospect is bright, though. So, yeah, we're anticipating rolling out this member direct to the members and our retirees, and that'll give them access to their information again. Because obviously, since we went, as we put it, as we went dark in February, they haven't had that portal. So we're very thrilled to be at this point in time and allow people access to their information again.
Great. Thanks, Barbara. And again, for the 892nd time, very, very well done. Thank you so much on behalf of the entire board.
Well, quick question real quick.
Yeah.
Barbara, so you said it went dark. Is that just for retirees or is that for active too, to get
Well,
access to the
the
portal?
actives, I would say for retirees in particular, because they don't have access to a payroll system like
Okay.
PeopleSoft. Actives can interact with the PeopleSoft system, and that gives them same information, not quite as summarized as our member portal will. That'll give them all
Okay.
their contributions, all their interest. And
Okay, thank you. Sorry, Drew.
When will, it's my understanding, I've received numerous calls on it, that the estimate calculator has been down, that's been down with this?
yeah,
Yeah.
and that's going to be available now with this member direct.
And, yeah, and when will that be back up? I thought that was the second stage part.
So that, this is our strategy at the minute. So we're rolling out to retirees because open enrollment is going to be starting in November. And there's going to be an uptick in calls, I mean, for the staff, and open enrollment will be going on. And then for the actives, we're anticipating December after open enrollment's finished. And actually, they can enroll, it's just that we're not going to be doing our outreach for them to enroll.
Any other questions? The second thing we covered was something, gosh, this is the second time we've chaired the audit committee. I've been on this board a long time. And about 2 or 3 years ago, we had an offsite at Hayes Mansion, and Darren famously said, you know, we just don't have a culture of risk. And he was right. And so we've been pursuing risk now for a number of years and embedding it into our culture. And there really were two components to risk. The most obvious was sort of the whole thing about the financial side, the investment committee, the investments, you know, how do we target that? And we see that when we meet with the city council, right? What level of risk should we have and how do we track? But there was a secondary component to risk that fell to the staff and to the audit committee, and that was internally, how do we deal with risk in our processes? How do we deal with risk as we audit ourselves? And there was a superb presentation, and the documentation is here. What was that gentleman's name, Roberto?
Alain Malari.
Oh, superb presentation. He's rolled up his sleeves, and he's going to work over the next couple of years to embed our understanding of risk about our processes and our internal numbers. The documentation's great. So fingers crossed. It's a very heavy lift. Of all the boards I've ever sat on, I've only seen 1 or 2 companies actually pull this off. And when they do, it's a huge increase in understanding of business processes and in reliance on those processes. So fingers crossed, Robert. I don't know if you want to say anything about that too, but that's really superb work that you presented to us.
I do. I want to first apologize on behalf of Alain. He actually has been sick the last couple of days. He wanted to be here this morning. I want to publicly acknowledge his body of work. Being a former accountant, auditor, internal auditor, I just want to echo your words, magnificent work. Creating the audit charter, creating the 5-year plan with ratings and scores. Of course, we haven't done the work, but there was a lot of thought to put into that. And I think what I mentioned at the meeting, Drew, is that if this is any indication to the kind of work that he's going to be producing, I'm just so excited about it. Long time due. He's going to be looking at the operations all over the office, and I think if I can put it in a sentence, I think we're hoping to go from being reactive to being proactive.
Exactly. Well said.
So looking forward to the work. I promise, Elaine, that you have all the documents there. If there are any questions whatsoever, I'm happy to address them. Otherwise, he already started the work. He's working on his first audit, and I'm looking forward to working with him. Of course, I can't emphasize enough, I know very well the body of work of an internal auditor, the need for not actual just independence, but not just the view of being independent, but actually to be independent. So while he will work with me for most issues at the office, he has complete access to both audit committee chairs, and he's had the right to reach out to the committee chairs and the board, regardless of working with me, because he reports to me from somewhat administrative standpoint, but in reality, he works for the committees and the board. And so he should have direct access whenever he needs to. So I just want to make that point clear as well.
That's great. That wraps up my report. We'll bring him forward once or twice a year as he makes progress over the next couple of years. That's
Yes.
all for the audit committee.
All right, thank you. Any questions, comments?
Question on, I imagine he's gonna make some recommendations. Who's gonna own some of these processes after he's done? Right, he's
Yeah,
an
no, I mean,
external.
there will be forever after, if we do this right, somebody sitting inside the organization that's constantly looking at what we're doing, how we're doing, and saying, we're not meeting our expectations. And that is, in the two companies I've seen that have done this, the core benefit that comes out is somebody that raised their hand and says, we used to do that really well and we're not doing it really well anymore. And so hopefully there will always be somebody in the organization that does that, right? And I think that's why Roberta said that person really has to be able to talk to us, because it's almost kind of like a permanent internal whistleblower, and you don't want them to be viewed that way. You want them to be viewed sort of as a permanent internal cheerleader that says, gee, we used to do that better. Let's all get together and have a beer and figure out why we're slipping. It is a beer kind of thing, because if you walk into somebody's office and say, man, it's much worse than it used to be, you're liable to get thrown out.
I told Elaine that he may have to start drinking beer, but
Yeah, we'll teach him.
In any case, I do want to, now that you raised that issue, Trustee Guerrero, is a couple of things. His audits are going to be twofold. They're going to be, some of them are going to be compliance related, and then other ones is going to have a combination of compliance and efficiencies, which comes to the operation. So, I mean, it's going to be both sides. I think he has excellent background. I think the question is going to be, at some point, of course, we do this every year, is at some point is whether he's going to need some help in the future or not. We're not there yet, nowhere near, but I'm looking forward to his work and see what comes out of his audit and the results, so that we can, number one, make sure that we are compliant. Number two, make sure that where we can become more efficient and effective, we can do that. I mean, just for sake of discussion, I would think that if we had this function for the last 20 years, I would hope that we would encounter all those issues that we had in reference to the reporting from the city on what was pensionable and non-pensionable. It would have been caught much sooner. So, I mean, that's the kind of work that I'm looking for. And I actually made the point to him that that's one area that I want him to emphasize, because that's an experience that I have from other organizations and my peers across the state, is that, sure, the city auditor here for the city have the chance to audit finance, but I'm going to work with him to make sure that he has access to the city payroll finance, so that he can audit that as well, as it relates to what is pensionable to us. Because we can have the best operation in the world, but if that information that comes down to us is not accurate, we will be finding ourselves 5 years from now, 10 years from now, doing another work on fixing everyone's pay, just because the data that came to us was not correct. So, anyway.
All done.
All right, it looks like your next meeting is October 17th.
Yes.
All right. 7.2B, just receive and file the minutes of May 16, 2019 Joint Audit Committee meeting for the Federated City Employee System and Police and Fire. 7.2C, receive and file the quarterly travel attendance analysis for Police and Fire. 7.2D, receive and file the updated on the Pension Administration System implementation project. which brings us to 7.2E.
Do we need to vote on that?
Yeah,
Does it?
because
Oh, it does, sorry, my
the
bad.
board has to
I've-
approve the
right.
charter and the internal audit plan as well.
I move that we approve the charter and the audit committee's recommendation.
All right, you got a motion by Lanza, second by Santos. All in favor?
Aye.
Aye. All right, so that was E that we just,
Yeah.
okay.
Yeah, I didn't realize we had
So
to
no
approve it.
discussion,
Yeah.
or you pretty
I
much.
mean, I
yeah, you've
mentioned,
had
I
this- you've-
provided the
yep.
discussion, and
Yeah.
I'm happy to address any
No.
questions there.
We'll bring him back at one of the future board meetings.
Okay.
You can see, look under the hood, he's doing a good job.
All right, brings us to governance, 7.3, governance committee.
We haven't had a meeting in some time, and in fact, after this board meeting, scheduled for 11 a.m., we'll have a joint governance committee. So for trustee Vado, trustee Muyo, and trustee Oswald, staff want to thank you for being willing to wait until 11 o'clock to have that committee meeting, which is maybe somewhat lengthy since we haven't met for a while. Thank you.
All right, the 7.4, disability committee. I think Santos, you got any updates?
Very pleased with our board and panel and everybody. Before I make a comment, I'll let Drew say a couple of words.
A couple of words. We put together a process. We used to hear these disabilities inside the board, and it was a very dysfunctional process. And so, gosh, maybe 4 or 5 years ago, Dick and I sat down and we said, well, what is it that we really need to approve? And we had Jeff's help and Harvey's help on that. And we instituted, those, probably half the board sat through those disability committee meetings. We instituted a really tight process. And we've never actually sat in a disability committee and said, so here's the process and here's how it works. And part of the reason we didn't go into great details, we were always a little worried that when you tell lawyers, and there's always lawyers in the room, how process works, no offense, Jeff, well, lawyers think of, well, how do I get around the process, right? But we've got enough respect for the lawyers in the room, and they've been very helpful, that we finally had a case come to us this last time where the process worked, but led us to a conclusion where we all went, oh, it doesn't quite feel right. And so Dick and I sat there and told everybody in the audience, including lawyers, well, here's how the process is supposed to work, and here's why it didn't work in this case. So that's kind of full cycle. Anytime you try to change something, you run it until you find, well, okay, it's working great, it didn't work. And I'm really happy to report everybody, the lawyers, everybody in the crowd, everybody on the panel said, okay, well, let's lift the hood, find out what went wrong, and we'll rehear the case in a couple of months. So I'm guessing, Dick, that's kind of what you want to point me to, but hopefully, I know it's a suicide mission, Franco, but we'd love to be involved in the redesign. I think the goal of the unions and the goal of the city and the goal of the panel is the same, which is to award a disability to someone that deserves it and to make sure someone who doesn't get one. And there are some things we can do, just like we've been doing over the years, I think, that will ensure that we have the highest confidence that that's what we're doing. Thanks, Dick.
No, thanks to Drew for making up the process of the check of the boxes and so on. It's such an improvement. I've been here over 20 years in disabilities, and I can tell you that this is the best process going. We saved the city and this retirement system money. But the most important was in this last case, it was over an hour discussion, very in-depth. And it's not that we didn't believe the candidate, because I happen to know the person, I know their work not that well, because I retired. But the causation and then a lot of times our own applicants, police and fire both, don't have proper records, and it's their fault all the time. So the doctor is trying to be very, very helpful and wanted certain more information. Of course, Drew and myself, we supported the doctor all the way. And not taking sides. Those things have to be, those are the boxes that Drew has written up, and they have to be to our satisfaction. And we make a decision based on a medical evidence only. That's all it is to it. So I want to say that was, and the candidate was very pleased the way we handled it, and the board and the doctor. And I can tell you.
We told them, no, not yet, at the end of time. I didn't know it was
Sorry,
long
that
for a
person
long
left
time,
with a
but we told them what to do to bring it back to
non-service.
Yeah.
But the key to this thing is that we had a process and that person understood it and we'll be back. But the way Drew handled it, from being a civilian and me being in a uniform, I thought it was a very combination to represent everybody well. And Dr. Tierman, I have to say, gives all of us such respect and vice versa. So to the people who have to gonna meet down the road, you can change whatever you want to change. I think you're making a drastic mistake because we both do it because we care about the applicants in our system. And we make it a very wonderful system. And the idea is that we're saving money and caring about the person. So anyway, good meetings, and we got more to do. So.
Thank you, appreciate
And
it.
there's no meeting September, which is Monday. It'll be October.
All right, so next meeting's October 7th, 2019. We'll go ahead and receive and file the minutes from May 13th, 2019, Police and Fire Disability Committee meeting. We'll also receive and file the first quarter 2019 dashboard reports and detailed statistic reports. Which brings us to the Joint Personnel Committee. Our Chair Chair Sinceri is not here, but I believe.
Yes, I will do my best, and I'm sure that if I'm not correct, I will hear from Chair Sanseri about it. So the Joint Personnel Committee met last month. The goal is to have a meeting every month until December. In fact, our next meeting is scheduled, thank you, Gia, for making yourself available, this coming Monday from 12 to 2 at our offices on the 5th floor. And in a nutshell, the overriding issue that they're working on is, number one, is really developing the process and the timeline for the annual performance evaluation for the CIO and CEO. And also, at the same time, they're working now trying to complete it by the end of December because of the grand jury report. They are also trying to work on performance metrics that could be included in the annual performance evaluation for the CIO and CEO. So they're trying to come to an understanding what those metrics should look like. So those are the two main issues that they are going to be working on for the next few months. The goal is to meet every month through November so that we can come to both of you respective boards in December for approval. That concludes my update, and Vince, if I was mistaken, you can let me know later.
No, he just texted me, he said you weren't mistaken.
Okay.
She actually did.
All right, thank you for that. We just need 7.5B, receive and file the minutes from February 20th, 2019 Joint Personnel Committee meeting. Which brings us towards the end. Any proposed agenda items?
Yes, Mr. Chair. I was talking with you briefly here. Can we get the closed session in terms of looking at possible investigations and so on?
Okay. Any other items? Public comments?
None?
None? All right.
Now, just because we leave early, do we get our lunch?
No.
I was just going to ask staff, we should have requested the lunch around 10:30, but it's forthcoming. It's going to be here soon.
They usually come right before 11.
10:30,
It's
11,
just-
yeah. So it's really mostly your fault because you ended the meeting too early.
It's his fault.
Dog,
Vince
you
is
back
gonna
to go
text
home.
me.
Okay, so
Yeah.
I just want to make sure, are you suggesting that when Vince is here, things take longer, and when he's not, things
Hey,
are quicker?
He said it, Vince, not me.
Okay, all right.
All right, this meeting's adjourned.
Okay.